Take it away.
Good evening, everyone. Thank you all for being here. I think we are the last panel of the day. Okay. There is one more presentation after us, but we'll let you go on your way after. We drop our 2 cents. My name is Sang Lee, and I'm the CEO of Constellation, which is a financial services blockchain company developing tools to make interoperability between services, real-world services, as well as the blockchain, and creating financial assets and tools to actually make it more robust for institutional investors. I will let my esteemed panelists introduce themselves before we kind of deep dive into what we're talking about today.
My name is Andy Krogan, CEO of Alameda Research and FTX. Background in both liquidity provision, market making, as well as the exchange business now in crypto.
Hi, my name is Darius. I'm the managing partner at QCB Capital. We are a 30-man team based in Singapore. We run a trading desk, OTC trading. We're focused on Asia, Korea, Jakarta, Malaysia, Thailand, a lot of Southeast Asian countries. Focus on a lot on the fiat markets, fiat to coin, coin to fiat markets, as well as the derivative markets in crypto, so options and forwards.
Okay, great. I mean, we'll talk about some interesting stuff before we do that. Darius, why don't we go to you? For those that are less well-versed of us in the audience, what is market making supposed to be? Because to be honest, sometimes we've seen in the industry that the reputation for it has taken a weird turn as cryptocurrencies have grown exponentially over the last couple of years. But we know that they serve a very important role, right, in creating a market that people can actually trust. So what is market making at its most fundamental level?
Yeah, I know, like Sang says, market making has become a bad word in the space. But we want to clarify that market making is actually just liquidity provision. Mm-hmm. The reason why it's become a bad word in the space is it's become associated a lot with market manipulation, which happens very often in small and thin markets. But in the traditional market space, you see that market makers are an essential part of the whole ecosystem by providing liquidity between exchanges, between OTC and exchange, between derivative products and spot products. The main role of the market maker is to provide liquidity as well as to make the markets efficient. Mm-hmm. So that's what market making is supposed to be. Mm-hmm. Maybe Andy can elaborate.
Yeah, no, you said it great. I mean, there's no project in any particular market that can function properly without liquid markets. Right. It's what allows any small project to enter the space. It gives the customers the best price. It keeps competition, in line. Mm-hmm. It's a necessary function for any functional marketplace. Right. So it's something that needs to happen, and unfortunately, in crypto, sometimes it gets a bad name because of a few bad actors.
So yeah, I think the key takeaway here is that as the cryptocurrency market is evolving and things are changing, new products are coming out, new companies are coming out. We've seen this evolution in traditional financial services, but in actuality, the orderly nature of financial services exists because market making actually exists, that somebody's putting a buy and a sell order and making sure that there's integrity in the system. What are the next steps that you see, and let's start with you first, Andrew, in market making? Like, what do the firms need to do? What do companies need to be more aware of as they're looking for a market making partner, or they're looking for other kind of trading counterparties? And what's the next evolution of that?
Yeah, so there's a lot of education that needs to happen on a lot of levels. One, on the exchange level, there's a lot of regulations that exist in traditional markets that stop manipulation in particular ways. And I think that we've seen a lot of exchanges move towards at least ways that they stop those things from happening. You also see projects where, in traditional markets, a project doesn't need to actually find its own liquidity provider, right? Like, these are things that are kind of mandated and rolled out as particular regulations before once you get listed on a stock exchange, you get the whole swath of things protecting your product. And in crypto, that's just not the case. Mm-hmm. You could be listed on an exchange that is completely idiosyncratic compared to a different set of rules for another exchange. So as things homogenize and as things mature and exchanges get better at realizing who's doing what and what might not be an honest procedure, or honestly, as projects realize they're like, oh my gosh, I didn't even know what I was getting into when I approached these people for this. I think we've seen a lot of that maturity come out over the last few years. There was a surplus of projects for needing liquidity in 2017 and 2018, and now we're kind of seeing the better projects, the people who are making better decisions, surviving longer.
Right. Darius, anything you want to add?
Yeah, I mean, this is a huge topic, right? Crypto is in a very unique space where projects are essentially venture businesses forced to trade in the kind of liquidity that big conglomerate stock, company stock trades. And then you have a very big liquidity dislocation because of the smaller market, as well as the fact that while traditional markets, the liquidity is centralized, here you have pockets of liquidity, pockets of thin liquidity all over the place. So huge dislocation between what it should be and the liquidity that the projects have. And as a result of that, you get a lot of inefficiencies, like the project might and these inefficiencies in pricing has nothing to do with the project. It's just purely people not knowing how to trade and the markets being really thin. So I think what is needed in the market for development and maturity is two things, right? One is guys who are building balance sheet. So you have guys who are, instead of just purely speculating, buy, sell, and abusing market liquidity, you have guys who are accumulating and holding. You don't have that much in crypto. And there's good reason for that as well, because, again, like Andy said, education, as well as getting time to pick up a lot of these basic technological requirements. Another thing is also the amount of leverage in the space. That the space is too leveraged in the wrong places and under leveraged in some, right? So you need to have proper derivatives where you are able to trade with leverage, as well as an avenue to hold balance sheet. I mean, FTX is one avenue where you can tokenize, put your tokens as futures. That actually deepens liquidity quite a bit, allows for leverage, allows for a bigger market. So I think again, building balance sheet and the development of derivatives like futures, options on the various tokens that we trade.
Okay, and I guess before we kind of go on to that field, that direction of derivatives and what we see the future of liquidity looking like, I was just looking at this the other day, but there's around 20 counterparties when you issue an ETF that need to kind of plug into each other. And people trust that when it happens, that the ETF is what it is. Do you think with the advent of new technology, with the way we've been operating and growing in this industry, that we can evolve that much faster but still create safety for investors in the long run?
Oh, absolutely. Yeah, and I think that's like kind of a lot of the value add that we see when we're looking at someone like myself and Darius who have moved from traditional finance into the crypto space. There's a lot of needless middlemen you can cut out with this technology. And like you said, there's dozens of people who frankly don't need to be involved in that transaction, and that can be kind of whisked away with some intelligent coding. And I think that's inevitable when you're talking about such an efficient market space and a place that values making sure that you operate at the highest capacity. Like, it's just inevitable. Like, it's something that you can't ignore. So it's no shock that you see people like Darius and the folks over at QCP moving from those spaces and going, well, this is obvious, right? This is going to happen. Right. Yeah, absolutely.
And Darius, as kind of a very active participant in the trading market, like you've seen, I guess, new counterparties kind of arise, counterparties disappear, blow up. Yep. And what are you seeing as like best practices between the counterparties that actually make sense and they're in it for the long haul?
Well, best practices is a tough one, man.
Well, let's make it up as we go.
Yeah.
Well, in the traditional markets, you have a whole system of clearers and many layers before you can actually trade. So as much as the crypto space peels a lot of that away, it also opens up a room for bad actors many a time. So it's actually as a new space, there's the players emerge. It's always been a lot of bilateral trading, and there hasn't been much of a coming together to sort of regulate the space, self-regulate. There's been some efforts, and Andy is part of this effort as well, to get all the dealers together to put together best practices, put together standards for the space. But I think it's still very early days. So I think in the end, the onus is on the current players who know each other to cooperate and work together. And I think that's coming together pretty well.
Yeah, no, totally agree. I think that it's a small enough space right now, and the community is strong enough that a lot of people band together to try to find the best practices. And again, there's no mandate out there, and it would kind of go against the feeling of how crypto should operate by having an official mandate. But I agree, we're all kind of in this together, and it does feel a lot more like a community in the traditional finance world, where a lot of people are trying to make sure that we're doing something healthy for the growth of the entire industry, as opposed to what's short-term best for yourself.
Right. And as you guys are obviously leaders in the market, I mean, South Korea is one of the most active trading markets from retail investors in the world. What would you say? Do it, don't do it, maybe? What would you say from an individual investor perspective, potentially here, that's looking to trade or is already trading, pitfalls or kind of warnings of words of advice?
Oh yeah, I mean, so I can't give too much financial advice, as you know.
Right.
But
this is not financial advice. Yes.
But frankly, I mean, nobody knows it better than a lot of the people who are from traditional finance who normally say, I mean, I trade Apple stock, I trade an option in a particular stock. It doesn't function any differently. Yep. But when you get into crypto, that's not true at all, right? You actually have to know your product. You have to know what you're doing. You have to know you're probably literally doing those transactions manually in a lot of ways. So you have to understand the products too. Yep. So it does cultivate a community that needs to make sure that you understand the products, you appreciate the products, and you're researching them, and you're involved in it. So I wouldn't say that anyone should be involved in something that they're not passionate about. I mean, that's something that also drives crypto right now. People are very passionate about it, and almost everybody who I know who has gotten involved is almost there's always a story, right? There's always how did you get into crypto? You're like, oh well, this crazy thing happened, and I would just recommend that people do their research, know their products, but that's not even necessarily on a coin level too. It's also on an exchange level. Speaking from an exchange perspective. And an OTC counterparty perspective, know who you're dealing with, know who you're doing these transactions with, because there's a lot of nuance to the space, and one of the good and bad sides of decentralization is it is on you to know who you're dealing with as the other side. Right. So yeah.
Just to add to what Andy said, South Korea is famously one of the most speculative markets ever, and everyone knows about the whole Kospi options and the blow-ups as well. So I don't think this is actually a crypto-specific question. In the end, it's up to you to really, the onus of the investor to actually know what they're trading, to control their own risk and leverage. And in the crypto space, this can go really crazy because of the players who are offering leverage that might not be responsible, right? Yeah. So in the end, like Andy said, know who you're dealing with, know your product, know your downside, upside, and your risks.
Yep. And Darius, I think you set us up well for kind of the next point I wanted to bring up, which is liquidity, market making. These are all also byproducts of financial tools that actually come into creation, right? And in traditional assets, derivatives is obviously much larger than the underlying notional. It's absolutely critical for risk mitigation, for risk management. But what we've seen in the industry is the kind of the fast and loose model really explode much faster because they're offering kind of egregious amounts of liquidity, and people want to kind of take home that big win really fast. What would you guys say about the state of the industry as it currently stands, and what are the evolutions or the responsible evolutions that you see occurring that you guys may actively also use and that you think would support the underlying foundation for crypto?
Well, let me try this one first. Well, you're absolutely right. The crypto space is a little crazy in this respect. Like I said, extremely speculative. One example is, let's say, you talk about big miners, big Bitcoin miners. You'd expect them to mitigate their risk by selling calls or hedging their directional risk, right? But these guys actually tend to double up their positions by buying options and become extremely speculative. And that's why you see the kind of movements in Bitcoin, like 20% moves in a day. These are due to the very speculative nature of the space, right? But at the same time, it's very necessary for these products to sort of develop. the interesting thing about the time we're in now is the profit opportunity. I mean, the guys in traditional markets, bond traders and stock traders, they made the most money in the 90s, 80s, when the markets were inefficient. And right now we're in a phase where the market is inefficient. So there are a lot of inefficiencies that you can exploit for alpha, for profit, and we should go for it, trade them more. But at the same time, the market needs to grow, right? It needs to grow. So while we see these inefficiencies and trade on them, it's good to have more participants in as well. So I think a rising tide sort of benefits everyone, and I think that is what we're looking for most of all. Getting more participants in, getting guys with bigger balance sheets in to participate as well. I think that's the most important for the growth.
No, yeah, I mean, he said it great. I mean, it's catching this lightning in a bottle.
Yep.
Right? You don't want it to be so reckless that everyone blows out and no one has anything left and it's a disaster. But you also want it to be an advantageous market that makes people want to use their money and put their money where their mouth is and actually invest in this product. And frankly, like we kind of saw this in 2017, right? Like markets start to move, people start to be more interested in other products, people start to be more interested in new projects. That's what enables other projects to even exist. Right. There's a lot of projects that wouldn't exist if there wasn't a bull market. Right. And so it's this kind of tug and war between, full steam ahead, nobody can tell us what the rules are because we get to do whatever we want now, which is part of the, ethos of crypto, but also making sure that it's not reckless. Right. And frankly, that's kind of where liquidity provision comes in, because that's what your job is. Your job is to be the person that says, okay, well, like this is where I'm going to put my whole balance sheet on right here to draw this line on this particular place. And I think that actually the crypto space has done a pretty great job of it, given the fact that if you're talking about comparing asset classes over the last 30 to 40 years, this one has remarkably less regulation and oversight and way more globalization than any other market that has had anything close to this level of explosive growth. Right. And it's just been very interesting to watch and be a part of.
And it's an interesting point you just brought up around kind of the less regulation and the rising tides concept that you brought up, Darius, because one of the things that governs most industries and allows it to really, really grow is a certain level or absolute transparency that occurs right across markets. We know how many dollars are moving into Korean won. Like that's very clear at a given point. We know how many options are being sold and how many options are being bought, and that allows you to say, well, I trust that a US dollar is $1. Right? And that's not something that we can do today. So what are your guys' thoughts on, like, should the industry evolve to a point where all information is being shared through similar data feeds? Do we create more opportunity in that transparency in the short run?
That's a really good question. I don't know. Sometimes as a market maker, you're like, I don't know if I want all my trades made. But at the same time, like, I think like conceptually it makes a lot of sense. Yeah. And it's almost certainly where things are going to go, in my opinion. It's something that again, it goes back to the ethos of what crypto is about. Yeah. It's about transparency. It's about trust in a trustless system that you don't have to actually have a relationship with the other person to know what's going on. Right. So yeah, no, I think so.
No, I think the crypto space is naturally more transparent than the traditional market space. Mm-hmm. The fact that everything's on chain. You can see everything. The trick then is to weed out what information is false or not, right? I mean, and exchanges right now, it's a bit fast and loose, like you said. The data might not be real. Mm-hmm. So I think it's almost like too much transparency where people are abusing it a little bit. Yeah. But if you look at the stablecoin space, for example, the way it's being executed in Asia, the transparency is very useful. I mean, I think. The transparency is one reason why sovereigns and corporates might use it as well, and I think that's one key difference from current fiat, and that should definitely be encouraged.
Okay. Right. And one of the things that we're working on at Constellation also are structured products. So kind of automatic risk mitigation. We know that the vast majority of people are not day traders, right? And so most of the movements that actually occur are supposed to be institutions that are risk managing positions for investors that go into pensions or 401ks, et cetera, et cetera. And I think the evolution of the market will occur in that manner where we have what we're working on is something like an ETF-like product, but that creates massive liquidity, right? And that creates that passive liquidity that we were talking about before, which is safe, and it also allows people to create new profit opportunities, right? Like if I'm a professional trader, I can use options and create enhanced positions, but as an individual, that's very, very hard. I'd rather just buy one token and say, oh, it's going to give me a 3% clip that month, right?
Yeah.
So what are you guys seeing in the evolution of that market? Do you see that exploding in the short run? Do you see that as something that takes longer to evolve?
First of all, I do agree. I think the structured product angle is something that's really important for crypto, only because there's this really big difference between people who have access to products in a traditional finance sense.
Yep.
They're already going through all these filters.
Yep.
You probably have a 401k or a Roth IRA or some sort of broker that you're dealing with, whereas like in crypto you have all this exposure to everything just as an individual in a lot of ways. So there is like this like weird discrepancy between the products you have access to. You can get 100x leverage as an individual, just like that.
Right.
So the idea of having these structured products is actually something advantageous, and I to talk about like what FTX offers, we offer these products which kind of do this as leverage tokens, which are something that is, instead of managing a margin position, you can buy an ERC20 token that trades at a 3x or a minus 3x position to the particular product, whether it be Bitcoin, Ether, or whatever. And we're exploring this. We're seeing growth in those areas. We're also having people reach out to us about particular products in general. I think in the near term we're going to see this happen.
Yeah.
Short term, hard to say,
Yeah.
but and also long term, hard to say too, because it really depends on how larger institutions kind of build this path for people. But I think in the midterm you're gonna see a lot of these products kind of grow,
Right.
just because like you said, it's hard to manage all this liquidation. Sometimes you want to go away for a weekend, and maybe Bitcoin goes down.
Our favorite word, R-E-K-T. If you're on a plane and you become R-E-K-T.
Yeah, no, 18-hour flights. You're like, geez, you're checking your phone as soon as you get off.
Right.
No, I definitely agree with that, right? And I think it's extremely important because it will shift crypto from a speculative asset to an investment asset.
Yeah, that's right.
Where speculative, where no one builds balance sheet, everyone just trades it, to something that people put the money in for the long term. Right now, that's really missing the space.
Yeah.
And in the short term, we've seen a lot of growth in this, especially with derivatives, because traditional guys don't want to deal with the physical product of like Bitcoin or Ether.
Right. Yeah.
They don't want to deal with it. They don't know how to deal with it. They rather deal with something they're familiar with. So an option or a future on Bitcoin is something they understand. It's something they can handle. They've done before. So we've seen a lot of interest actually in the short term. We've seen a lot of interest and growth in structured products where the volatility is managed by the reduction of leverage or by certain structures where you sell option against a physical or something like that, right? Like a covered call product. These are more investment-like products with very strong profit opportunities because of the way the market is structured now. Crypto is the only market where you can see volatility, implied volatility of like 150%, right? Yeah. This kind of volatility doesn't exist. This kind of opportunity doesn't exist in any other market. It exists in crypto and probably not for long. And it is a extremely good investment opportunity. And I think in the short term you will see more and more family offices, high net worth guys coming into these kind of products.
And this goes kind of back to what we were saying about before, right? Which is, rising tides, maturity of the industry, but that starts closing our gap in volatility, right? As the market gets bigger and more money comes in, actually, it starts shrinking, so that opportunity starts shrinking. So, if you are a believer in cryptocurrency, it definitely sounds like, now is a very interesting time. And I think we've had the unique change over whereby we, like a lot of financial services, like all three of us came over knowing what we know, and then you bring it into cryptocurrency, so it's just this like lightning strike from nothing to like an infrastructure, right? And now we need a lot of the players to start working together to make that even, kind of grow to the next step. When you guys are, I think we have time for like 2 more things, and if anybody has any questions for Darius or Andy, please just raise your hand, because we've just been kind of talking. What are some market trends that you guys are seeing right now, right? We were talking about Korea as like a big trading market, but what are some like immediate tangibles that you guys are seeing either change, good or bad, that the regular layperson may not be aware of?
I think that the most interesting thing over the last like few months, I mean, at least for us, is it's interesting to see the ebbs and flows in stablecoins.
Yep.
I think it oftentimes shows how particular geographic regions are feeling about crypto. And when you see people selling stablecoins for Bitcoin or vice versa, or even flows between geographical regions, it's always like a very particularly interesting piece of information about a global economy that, frankly, again, can't be stopped, right? Like these are things that might only be privy to people at banks who happen to see a subset of wires. But if you're running an OTC desk, you see these ebbs and flows. And frankly, I mean, most people have been trying to buy crypto right now. Like lots of people want to buy crypto over the last few months. It's been a very interesting market move, and something that is always a very important thing to be on the lookout for.
Right. Just to add to Andy's point, right? This stablecoin phenomenon, I think most people don't realize how big it is.
It's huge.
Asia is stablecoin land. If you ask any OTC desk based in Asia, the flows for stablecoin may probably make up 80-90% of the total volume. If you go to a country like Hong Kong, you go to the money changers on the street, you can trade Tether physically. You don't have that kind of adoption in any other. I mean, that's real deep adoption. Like people are using stablecoin for the very fundamental purpose of monetary mobility in Asia, and the flows are very institutional. So anybody who thinks that crypto is still a small emerging market, with regards to stablecoins, it is a shadow banking layer that has already formed. Deposits, interest rates, borrowing, lending, whatnot. It's getting quite mature. And with regards to that, right, one other thing that I think is low-lying fruit in the crypto space is probably the interest rates, right? Yeah. You're talking about a space that is, if you look at traditional markets, interest rates are very governed by central banks. Many central banks, many layers of regulation. In the crypto space, you are talking about an interest rate market that has no governance, right? Not yet, at least. So you have speculators speculating against each other. And what you have is a huge dislocation in rates. You have rates that can be 1,500% return. The kind of rates you only see during war times in traditional markets. And these rates can stay there for 2-3 weeks, right? And people don't even realize what's happening. It's insane. So, like Sang said, there is going to be this period where there's adjustments. But because there's no regulation here, the interest rate market is a particularly interesting market for all of us. I think that is one market that the institutional traders see in crypto that the retail guys don't see. And it's very, very low-lying fruit because a lot of idiosyncrasies.
Let's talk about that a little bit, because that's definitely something that financial services professionals love, right? As kind of a topic, it's almost a predictor for everything, right? Like exactly. When you look at an interest rate and there's like a 10 bip change, something really bad is happening in the world that needs to be checked. Like, what are we seeing in terms of like a standardized yield or debt products that can be traded freely? You can actually swap out in terms of interest rates. Is that stuff that exists in the market right now?
So those definitely exist. I think that the big thing I've noticed over the last year is just a general increase in competition in the lending market. You've seen a lot of very sophisticated players come in, whereas before, frankly, a lot of times it was maybe a group of people who owned a particular subset of coins and didn't know what to do with them and wanted to make some money on it, and just kind of put their finger in the air and said, maybe I charge this. And now there's like a lot more market data out there, and it's become a lot more sophisticated, a lot more competitive. It's been pretty fascinating to watch, and frankly, it kind of lends itself just to the maturity of the space, because it's also how the traditional finance space works with the ebbs and flow of funds and who wants what asset right now and what's the demand for a particular thing. So it's been unbelievably fascinating to watch, and frankly gives you a good indication of like where things are moving in the future.
Just to add to that, I think I'm actually really, as a crypto person, proud of the Perpetual Swap product. Right,
Yeah.
it's a unique product in the space.
Yeah.
It increases. I mean, it's so innovative, right?
Exactly.
It's-
It's become the heart of liquidity in the space, effectively, right? It's a hybrid between spot, a forward roll, and a future. And it's a product that has centralized a lot of the liquidity, sucked a lot of the liquidity in. It's a genius product. The traditional market doesn't have this product.
Yep.
It only exists in crypto. And I think these kind of innovations are going to be coming up more and more. And I think it would make the crypto asset class a unique asset class among as it moves towards being a more mainstream asset class as well.
Right. I think we have time for probably one more comment, and let's go back to that point that I was saying, like for people that are interested in trading, for people that are interested in investing, right? There's a big problem with crypto for a lot of people because it runs 24 hours, right? And the blockchain's running all the time. Stock market's closed. It takes a couple of days to clear. Like everybody go, have dinner with your family. Like it's like a real thing. You can go home on Fridays. But you guys, in being in market making, it's even more intense, right? So that probably changes as the market gets bigger because certain things can get automated, et cetera, et cetera. But for people that are in trading right now, how would you say to mitigate that, if at all possible?
I would say that if that's a sensitive topic for you, then definitely lower your leverage. There are places that are offering new products. I mean, besides my own service of FTX with our own leveraged tokens, I mean, like Darius said, the Perpetual Swap does kind of this for you if you lower your leverage. It's a future that kind of redoes itself every day.
Right.
I think that we're going to see the market produce this. Like, it's pretty obvious that while crypto is 24/7, that's one of the beautiful things about it, people also do need to sleep.
Yeah.
And I think we're gonna see a maturation of a lot of products that allow for such things. Whether it be, hopefully, I'm hoping that one of the things we're providing is our leverage token product on FTX that gives people that peace of mind, or whether it's a structured product that's going to be listed by a particular group or partner with a couple exchanges. I think it's pretty obvious that's where we're going with this.
Yeah, I think for the traditional, a normal retail investor, an active leverage product is asking for trouble.
Yeah.
We have difficulty dealing with some of
we
this.
do it. I don't take weekends.
We've given up our lives to try and manage this, right? So I would say, a couple of things. One way is diversify your risk, look for indexes. I think FTX is offering some kind of index product as well. Or give it to somebody who has already given up their lives to manage it for you, someone like us, maybe.
Yeah.
Or, just do something more passive. I think, leverage is dangerous. Make sure you control your leverage.
So I think our time's up, but to quickly summarize, all the excellent points that my panelists brought up for us, the industry is in a time of change, right? And I think we saw 2016, 17 happening, but it was almost like a rocket ship, straight up. So you can't even see change when things are moving that quickly. But I think we've gotten to the point where we're getting the pieces in place, right, to turn it into a real financial asset, into an investment asset that we can responsibly invest in. And then to the second point, I think it'll be important that unless you are doing this professionally, and even if you are doing this professionally, it's a very drastic place to be if you are over-levered. So be careful, be responsible. Thank you guys so much. And for everyone who's visiting Seoul, I hope you have a great rest of your trip. Thank you.
Thanks.
Thank you.
Thank you. All right.